The entire market sold off aggressively today. I had every single one of my trading bots close for a loss and hit a stop loss. Ended up having a $43,000 realized loss today. And if this week continues, it will definitely get worse because I'll be hitting some stop losses. And in this video, we're going to talk about what happened, what caused the S&P 500 to sell off nearly 3%. We're going to cover Tesla. We're going to talk about NIO, AMD, and some other semiconductor companies, as well as Bitcoin, CleanSpark, and a couple of others. Today was a very, very important day for the market. We had the Fed's decision, and really the 25-point basis cut is not the end of the world and really not what drove the market off the cliff. It's always the presser afterwards, seeing how hawkish or dovish Jerome Powell is and what his outlook is for 2025. This sent the S&P 500 after multiple weeks of consolidation into an absolute free fall, which also took our darling Tesla that has broken out, since this consolidation from lows to high of about 40% in 2 weeks, brought us from a high today of $489 down 12% to a low of $427, flipping that BX trender back to red, which is a sign of a potential pullback down into a support level. Now, I wasn't expecting the entire market to sell off. I was actually expecting Jerome Powell to come out pretty dovish, and I was expecting the market to continue to run. And of course, that didn't happen. Now, as far as my losses today, the $43,000, I'm not upset, right? Number one, because all the stop losses on my trading bots hit. And when you have a day that the S&P 500 drops 3%, every single strategy out there, unless you were short today, lost money. So I know that it's not some fundamental flaw within my strategy. I know from a risk management standpoint, because we didn't lose anything serious. I mean, $43,000 is a lot, but relative to what we're up this year, it's nothing that crazy. Now, once AMD gets closed out, once my Tesla calls get closed out, we'll probably add another $100,000+ to that loss. But once again, relative to our returns this year, it's not that much. So I know that from a strategy standpoint, I'm fine. This is just a massive pullback. I know from a risk management standpoint, I'm fine. I'm doing what I should be as far as position sizing, and we talk about that within our courses. And so on a day like today, I can't do anything other than say, well, shit. Because I did everything I should have and I didn't get the outcome that I wanted, but that's fine. Now we just wait once again to see if all of these stocks, including Tesla, pull back down into a solid support level and see if we can get some more dip buy opportunities. Looking at the daily chart, I don't like the fact that this has flipped to red. What I think is going to happen tomorrow, and I'm not trading based off of this, is that we could see a potential pushback up into 465, maybe $470. But at this point, what really needs to happen is that price needs to flip on the 1 hour back to green, and we need to try to take another high out. If that cannot occur, then I do think there's a chance that Tesla could continue to sell off into a support level, and we're going to go through how we can find that out in a minute. But looking at the fact that the weekly BX is still holding green and the histogram is making higher highs means that we can remain bullish on our longer term calls. Once this weekly flips red, that's when I will be concerned of a potential pullback to maybe $350 or $300. But the fact that this is still green, and as long as it still holds green into Friday, then it means we basically have the ability to buy up these dips because massive buyers are still stepping into the market. Now, some support levels that we could potentially pull to, if this is the short-term top, is going to be back to $400 or $375. Now, if price does continue to pull back, the support levels that I would expect this to fall into would be somewhere around the worst case $400, because at that point, that's where we would see the market bias meet up with current price action. And in most cases, when price is pulling back into the market bias within an uptrend, that is our area to accumulate long. And so at this point, I don't see any real worry as far as Tesla. Worst comes to worst, we get a continued pullback that I think will only get bought up in time. The real worry, as we've said before, is when the weekly flips red. Semiconductors were hit pretty bad today, and Nvidia was one of them. We've been tracking this head and shoulders pattern that's been setting up on Nvidia for the past couple of weeks. Now, personally, I have not been shorting this because even though it did set up a very good opportunity when the BX flipped from green to red, we would have had a really good setup. I don't like to short things that are pulling back within an overall uptrend. If I'm looking to short something, then I'm going to want to short something that's in a consistent downtrend. For instance, a time to be shorting Nvidia would have been from November 22nd to November of 2022. Anytime after that, the stock has done nothing but basically go up in a massive straight line. Since then, the stock has done nothing but basically continue to go up. Instead, what I'm normally looking to do is find areas where institutional investors are going to be entering to save the overall trend. Now, the way that we normally do this is by using a Fibonacci retracement. I have Fibonacci retracement courses completely free in our free course library down in the description. But basically, you'll take those Fibonacci retracements from swing lows to swing highs. And the area from the 0.618 to the 0.786 is called your institutional buy zone. This is normally going to be areas where institutional investors will step in to save the current structure or save the current trend and push the stock up. You can see that this time we had a bounce. If we take a Fibonacci retracement from this low on August 5th up to this most recent high, you'll see that this was also an institutional support level. And so every single time that we pull back into these levels, normally price is going to bounce. And to find our most recent level, we would attach it from our swing low of 103 up to our swing high of 150, which in this case gives us an institutional buy level between $120 to $114. That's why I've been saying that I'm looking to enter somewhere around $120 to $110, because that means that we are getting about a 60 to 70% discount within this most recent range. And we are going to be entering when institutions are entering. The absolute low that I'm expecting Nvidia to pull back to within the next couple of weeks and months is $112. I do think from this point that we will see price bounce off of this 120 to 110 level and break back up to $150 and $170 in Q1 of 2025. At this point, I'm going to continue to sit out. And if I was bullish trying to time a dip buy here, I would at the very least wait for the BX trender, which is the indicator at the bottom of your screen, to flip from red to green. This is usually a pretty clear sign that the stock is going to break out, or at least find some sort of bounce. Until then, I would not be trying to time the bottom. AMD is another stock and a semiconductor company that I've been looking at long, and I actually still hold a position in. Now, my original analysis and thought process on this was that since price bounced in that institutional buy zone before, that we had a very good chance of price breaking out. You can see that we had lower highs moving their way into a support level. And before this most recent break, we actually had higher lows moving into this support level. Normally, after we bounce within this institutional buy zone, this is going to be the sign that this higher low, which did not end up confirming, is going to break out to $160, $180, or $200. Now, I still think that that's going to happen, but it seems that we're going to come down to test the smart money zone before we clear all of these buyers out. We know that we are within a bullish structure. The way that we know this is if we take a horizontal draw tool and we mark off all of these most recent lows that have not been taken out, we are continuing to make higher lows, and higher lows with higher highs is a sign of bullish structure. Now, the way we find this institutional buy zone is that we mark off our most recent low and mark off our most recent high. From that point, we take a Fibonacci retracement from that low to that high, and the 0.68 to 0.786 will be our institutional buy area, with the absolute lowest that big money will push the stock down to being the 0.826. The smart money zone is normally going to be the absolute lowest, like I said, that we will see a stop hunt or a sell-off move into before a potential bounce. Normally, I would wait for price to enter the smart money zone and then look to go long. I would look to hold a long-term position back up to equal highs of $200 or maybe even $220, which would give us a potential 100% move to the upside in the coming months. And I think that that is going to end up happening. I just think that this short-term sell-off is going to continue first, unfortunately. Now, at this point, if the weekly candle closes red, as it's showing at the bottom of your screen, I will walk away from my position on AMD. It will suck if it bounces, but I would rather wait for the weekly to turn green once again, or at the least for the daily to turn green once again before I look to go long. I still think that AMD has a really good chance to move 100% plus in the next couple of months. But at the end of the day, I don't mind taking some short-term losses in order to obviously play this out over the next 12 to 16 months. Now, the S&P 500 itself today dropped 2.73%, which is a lot. And you can see that we were consolidating here for multiple weeks, basically from December 4th up until today, which was the 18th. And with all of this consolidation, we are expecting a significant move, or at least I was, up to 610 or 620 if Jerome Powell ended up doing a 50-point basis cut and if we ended up at least getting sentiment of a dovish Fed, which didn't happen. Instead, the S&P 500 sold off drastically. And at this point, the BX has turned red, which is not a good sign. Now, I wouldn't just be dip buying this. I do think that short term we could get a bounce back up to 600, but really what we need to see here is that BX flip back to green. If we take a fib from swing low to swing high, you'll see that our institutional support level is from $583 down to $576. So I think there's a very high chance that if the S&P 500 continues to pull back into that $580 range, that big money and institutions will most likely step in to save the broader market structure. We really don't have anything to be worried about until the S&P 500 breaks $570. If this level breaks, then we're in some shit. This is where structure will break and we could start to see a potential long-term reversal. But until then, there's nothing to worry about. As of recent, you know that I've been very bullish on NIO, Baba, and a couple of other Chinese names. Now, this is very rare because normally I don't want to touch anything Chinese related because I've been burnt in the past with companies such as Luckin Coffee. But with the current setup in the market, I think that the risk versus reward is off the charts. And I think this setup has about a 65 to 75% chance of actually happening. Now, as you can see, prices continued to sell off into lower lows over the past couple of years, which is not a good sign. As of recent, however, price actually made an equal low of about $3.67. This is usually a first area that a potential bottom could happen, and it doesn't mean that we go and buy this. It just means that we need to monitor for the next couple of weeks to see if a potential bottom is forming. From here, we're going to take a look at the most recent high, which is $6.04. In most cases, a stock's downward trend is going to make lower lows and lower highs. However, when now price no longer is doing that, which you can see, it actually makes equal lows and then breaks through into a higher high. This is what's called a break of structure. Now, instead of making lower lows and lower highs, we're actually making higher highs. And so the range that we focus on from this point is from $3.70 up to $7.75. You'll see that if we move into a daily chart and we take a Fibonacci retracement from those two levels that we just spoke about, the key areas that we're going to want to focus on is the 0.618 Fibonacci to the 0.786, which I've indicated in blue, and the 0.826 to the 0.786, which I've indicated in purple. The blue area is going to be our institutional buyers area, and this is normally going to be when big institutions and hedge funds are allowed to enter into the stock to save the overall trend and structure. This purple area below it is called the smart money zone. This is normally the absolute lowest that they will send a stock to before a massive breakout. A strong example of this could have been looking at Tesla back on June 11th, 2024, up to August 5th. Price went from swing low to swing high, pulled right back into that smart money zone before breaking out. Of course, this does not mean that the stock has to bounce here and that NIO needs to hold, but we do know that there's normally going to be a bounce here about 60 to 70% of the time, and we also know that we're getting an extreme discount. If this were to bounce, I would expect NIO in the next couple of months to continue to move its way back up to $7 and maybe even $8. And in the worst case scenario, if we were to see this thing continue to sell off and drop, we would be looking to exit at the absolute worst case somewhere down at $3.65, which would be a 15% loss. This is a risk versus reward that I would take each and every single time. What I really want to see at this point is the daily chart turn green once again on this BX trender. If I turn on our bot overlay, you will see that our BX bot has tried to snipe this 2 times already. The first time when the BX flipped on November 19th, resulting in a small 4% loss, and then most recently resulting in a break-even trade, which unfortunately was up about 16% at one point. But like we said, we are looking for that bigger move, and so we're okay taking small losses as this thing is trying to hold the support level. And if we can confirm a bottom, then we will be here to play this back up to $6 and $7 and hopefully even $8. Baba is another stock that is setting up well, and that our trading bots have tried to time the bottom on twice now, which failed for very, very small losses. This, as well, is also pulled back into our institutional buy zone. And so we know that if we're acquiring anywhere between $85 to $80, that we are getting a massive discount, basically about a 70% to 80% discount of our most recent range of $71 to $116. And we know that this is also normally going to be the area which big money is going to save this trend and push this back up. So I think Baba in the next couple of months can move its way back up to $115 plus. Now, the final thing that we're going to cover in this video is going to be CleanSpark and talk a little bit about Bitcoin. Now, of all the crypto miners that are setting up at this point, CLSK is the one that looks the best. In the prior segment, we talked about NEO and we talked about the same exact setup that we actually have at this point. Price started making equal lows. We started making a higher high once price broke through $13. And now the trend is back to the upside. You can see that price pulled back into our institutional buy zone between $10 and $9 before bouncing massively about 82% within 1 week. From that point, if we take our fib once again from swing low to swing high, you will see that our institutional buy range is sitting here between 13 and 11, and our smart money zone, which is the absolute lowest, the most optimal entry that we can get, is sitting at $11.23. Even though price sold off drastically today, the BX is holding green. So I think at this point, there's about a 60% chance that this level will hold and that price can move its way back up 60% plus to $18 in the coming months. This obviously offers a huge potential upside, much like it did before. And of course, if this fails, which it always can, we're looking at worst case scenario from here, another 15% loss, which is a risk versus reward that I would take each and every single time. I hope this video helped, guys. Of course, today sucks. To take losses sucks, but it's just a part of the game, right? And I need you guys to understand that it doesn't get easier for me. I've been doing this for 9 years, and you're going to see here that if we just go back to the beginning of this year, we started the very beginning of this year with a $2 million portfolio. Now it's up to about $6 million. And the first month, we lost $34,000. Very first month of this year. We had a great February, we had a great March, we had a great April, and then August, we lost another $129,000. But when you zoom out and you look at the entirety of the year and you look at the consistency of our profit and loss, not only did we have massive drawdowns at one point of $500,000, but we actually had months where we didn't really make money. I mean, from July 19th to October 10th, the fund didn't make a higher high. And then from the 1st of October till now, we have nearly doubled the account. So I want you to understand that losing is just a part of the game, and you don't need to reconsider your system. You don't have to go back to the drawing board. You just need to focus on the fundamentals, sticking to your system, using proper risk management, and making sure that when losing days occur, which they will, that you don't do anything catastrophic. I see too many people on days like this who reach for the bottle or just have a terrible experience, whether it's self-hatred or just treating people in their life terribly because they might have blown money that they've worked very, very hard for. But at the end of the day, you cannot have an attachment to this. And if you're somebody who is acting like that, then I really, really recommend distancing yourself for a bit from trading and walking away. It took me a very, very long time to have a detached mentality that I have with trading. And honestly, the detachment that I have is truly understanding that my life is not going to change. From 5 years ago to today, where I've had the biggest returns, and even just looking at last year to today, my life hasn't changed. Do I have more followers on YouTube and more followers on X? Yes. Did we grow the account from 2 million to 6 million, being up about 4.2 million right now? Yes. But nothing's changed. I'm still the same guy. I'm still making the same videos. I'm still doing the same stuff. And the wins and the losses, they don't really change anything. It's just all psychological. And yes, of course, it's easy to say that when you're sitting here 9 years in making what I've made this year. But I just wish that I could go back and tell myself that from the very beginning, that none of this is really going to matter. Who you become along the journey, the discipline that you learn, the ability to trust yourself, the confidence that you have in yourself, that is what the gift is. That's what really matters. So I hope that you guys have a great day. And obviously, if you had a shitty one, tomorrow's another one. We'll see how the rest of this week and the rest of this year pans out. But just like how we take the wins, we also have to take the losses in stride. If you want to get access to all of our free resources, all of our courses will be down in the description under the free course library. We have over 10 courses teaching you guys everything that I know about trading, as well as my exact strategy. And if you want to get access to all of my real-time trade alerts, all of our trading bots, live stream with me every single week, you can join our Discord community and our private mentorship group. The link to that will be down in the description. We're doing a Christmas special where you can join for 70% off your first month using the code MARKET30. I try not to push that or sell that because I'm honestly going to put a cap on that. We're at about 1,400 people right now, and I'm going to cap it soon. But I know that if you're somebody who's staying till the end of a 29-minute video, then you're somebody who's taking this seriously. And so I want to reward that, because that is something that in the beginning years of my trading career, I probably wouldn't even have been able to do. It's so easy to be distracted, and it's so easy to go move on to something else. And it really means the world to me that you guys give me your attention. Thank you for all your support, and I'll see you guys next time.